Hi everyone, welcome back. Hope you guys are having a great day. So this is a clip from a previously recorded video. This is a much shorter clip of it. But as always, not financial advice, for entertainment only. Do your own research. And I'm investing in closing companies. And if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And let's get into the clip. So first, we'll get into Digihost here. Digihost reports positive adjusted EBITDA for Q1 2023 and provides operational update. So let's take a look at here what we got. Here are the main things here. So revenue from digital currency mining and sale of energy of 4.1 million reported for the 3-month period ended March 31st, 2023, compared to 7.3 million for the 3-month period ended March 31st, 2022, so from last year. The decrease in revenue is primarily driven by the period-over-period decline in the Bitcoin price of Bitcoin. That is true. The other factor is they haven't been growing as fast as the Bitcoin network hash rate has been. In order for them to be generating the same amount of revenue, they got to be basically growing with the network hash rate, and they have not been doing that. Also, obviously, the network hash rate has increased substantially from last year as well. That contributed to less revenue. The company mined approximately 168 BTC for the 3-month period ended March 31st at an average BTC price of approximately 22,877. So in here, they reported 168, but when they release their monthly production updates, I get a different number here. So why don't we look at that really quick, and I think that's it on it. Yep, that's it that I want to talk about here. So let's take a look at Digihost here really quick as far as what they reported here in the last 3 months, or for the first quarter in their production update. So we got January over here, we got 64, 56, 56, or 58 and 56 here. They reported 178.81 Bitcoins being mined during that period, but I guess that part of it is they also do, or they have a hosting agreement with another company where they split the revenue on that, and I think that's why the number for them has actually come down here as far as for what they actually get for that. That's why my number here as far as what they actually generated in revenue for Bitcoin self-mining is off. I had them at about 4.069 million. They came in at 3.809 million, so I was off by 6.85%, and that's why I've been off quite a few times here, it looks like. And that's basically, I just figured out that they are actually using a hosting provider or with a hosting provider, and they're basically doing a shared revenue and shared electricity split on it somehow. So I got to figure that out, how that is actually impacting it as well. Okay, so that's it for that right now. Let's take a look at the numbers that we do have here for them. So approximately shares outstanding. This is reported from Microsoft Excel. It's pretty close. Actually, I don't think this is pretty close. I think they are, let's go take a look down here because I actually checked on this. 28.5, so that's pretty close. And they have them at, right now, 28.02, so off by a little bit here. Market cap is about 41 million right now. Stock price is $1.49. Hash rate currently is 913 petahash. Future is going to be about 1.1 based on what is reported as them buying. Once they get updated, or if they report on buying any miners, that will get updated as well right now. Okay, so we've talked about this before in the production updates for April. We won't dive too deep into that. We'll look at the last 4 quarters revenue. Last 4 quarter revenue have been kind of up and down here a little bit. They had a really good Q2 of last year, 7.46 million, down to 3.7, then up to 5.6, then back down to 3.8. Now my estimate is 5.7, but given that they are also doing the sharing on the revenue and on electricity as well, that's probably going to be down from that, maybe around 5 million, maybe hopefully within 6% of that. But I'll try to get this number updated, or at least a little bit closer to what they actually mine for themselves. Now, the last 4 quarters operating costs have come up here in Q4 to 10.16 million, but have dropped down now to 6.54 in Q1. So that is good there. Cost to mine 1 BTC minus depreciation. They threw a lot of stuff in Q4, made it go up to 47.63 thousand per Bitcoin. It is back down to 13.29 thousand per Bitcoin right now. That's cost to mine 1 Bitcoin minus depreciation. Bitcoin mined quarterly. This is also a little concerning here. They're mining less and less Bitcoin, meaning they're not growing with the network hash rate or keeping up with it. And that's why they're having less revenue. The only thing that's going to save them is if Bitcoin goes up in value higher. That's how they're going to be able to generate more revenue. Debt to equity has also increased here to 0.33, which isn't bad. And then current ratio is actually kind of concerning as well. That has come down to 0.69. We want that to be at least at 1 or above. So that's concerning there. And then total current assets has been coming down here each quarter. We're down to 3.4 million right now with pretty much a high of 18.8 in Q2 of 2022. Total current liabilities has been kind of flat for the most part. Did come down a little bit here to 2.65 in Q3. We went up a little bit in Q4 to 3.2, and then it's back up to 4.9, where it's pretty much the same as it was back in Q2. Obviously, the concerning part is current assets are coming down, current ratio is coming down as well. That's kind of concerning for them as well. Okay, now let's take a look at the actual numbers that we do have here for them. And we'll get into my metrics here in a little bit. Let's take a look at the assets that they do have right now. So cash and cash equivalents came down to 821,000 from 1.8 million. Digital currencies way down also 262,000 from 2.8 million. And then we have amounts receivable that actually went up, so that's good, 2.1 million from 1.2. And then income tax receivable is actually down to 168,000 from 244,000. So total current assets is down to 3.4 from 6.12. Like I said, that's concerning a little bit there. And then property and equipment, that's down a little bit here to 41.2 from 41.8. Right of use assets is also down a little bit to 2.49 from 2.53. Promissory note receivable, that's the same. Intangible asset went up a little bit here to 1.4 from 1.3. Goodwill has been reported again here at 2.4. That wasn't there before. And deferred tax assets, that's 0. So total assets right now is at 51.9. That's down a little bit here from the 52.5, almost 52.6 that they had at Q4. Okay. Now, as far as liabilities are concerned, accounts payable and accrued liabilities has increased to 3.2 million from 2.3. So that's a concern there. Amount going to Northern Data NYC LLC, that actually decreased to 115,000 from 322,000. So that's good. Lease liability went up a little bit here to 103 from 99,000. And then mortgage payable actually went up a little bit here to 496,000 from 488. Not a big deal there. And then loans payable had 957,690, so that's a new one there. So total current liabilities went up to 4.9 million. And then you can see some of the other things here. I'm trying to see if there's anything that was definitely a big change here. Warrant liabilities, that went up to 6.4 million from 821,000 in Q4. So that obviously brought up the total liabilities to 13 million from the 5.4 that they did have. So that's concerning there on that one. Total liabilities and stockholder equity, 51.9 compared to 52.5. So that came down a little bit here. Revenues. Here's what we have. So self-mining came in at 3.8 million. That's down from the 5.6 reported in Q4. I wonder if sale of energy was in this as well. They didn't report it at least in Q4. They did report it in Q1 now. So that could be the drop in that one. Expenses, cost of power actually came down here to 2.2 from the 9 million that they reported here in Q4. So that's good. That's more in line with where they were in Q3. Other production costs actually went down to 183,000 from the 1 million. So that's good. Depreciation, amortization is down a little bit here to 3.2. That's not a cash thing, so I'm not really too worried about that. Minor lease agreement, that's a new one. That's 638,000 here. Cost of power plant operations, that's a new one, obviously, because they do have the new power plant. So that's 269,000. We'll see how that goes forward. And then when we take a look at gross profit minus depreciation here, we're at about 45.59%. So that's pretty good. It's better than it was in Q3. So that is a bit of an improvement there. Okay, that's kind of what I base my numbers on when I do the 50% net income from gross revenue. This is kind of what I'm looking at here, 50%. And then when Bitcoin does really well, they get closer to 75%, even better than that as well. Let's take a look at some other things here. Office and administrative expenses, that came down to 467,000 from 794. So that's good. Professional fees also came down to 737 from 415. So that's good. Regulatory fees actually increased to 83 from 5,000 here. Gain on sale, that's nothing. Loss of settlement, that's nothing. Foreign exchange gain, that's down to 47 compared to 799,000. So that's good. Loss on sale of digital currencies, that one was 873,000 in the positive. So that's good. And then loss on digital currency option calls, that one was down to 164,000 compared to 1.9 million. So that's good. Other income was up to 6.8 thousand from 218,000. Change in fair value was down also negative this time around, 225,000 compared to a positive 1.1 million. And then share-based compensation was down also nicely here to 401 instead of 812,000. Let's see what else do I have here. Loss on revaluation of digital currencies, that was down to 10,000 compared to 1.8 million. So in total income loss before income tax came in at negative 3.3 million compared to 26 million here in Q4. So that's good, but it's still higher than it was in actually Q3 here. So that's not good. Going down here, the net loss came in at 9 million here for the quarter compared to 26 million loss in Q4 and 1.6 million loss that they had in Q3, where they actually had a profit here in Q2 and Q1, it looks like, of last year. Okay, so it's better obviously than it was in Q4, but still not that great. And then they lost 32 cents per share on the EPS, earnings per share. Okay, so that's all that data there. Let's take a look at some of the metrics that I do have here for them. So cost to mine 1 BTC came in at 13.2, almost 13.3 thousand. So that is an improvement here, but it is an increase from Q3 nonetheless. Debt to equity has come down here, or went up a little bit here, and the current ratio came down. You guys can take a look at the book to value ratio, all those other things. And then I look at also revenue compared to general administrative compensation, and it has come down here to 21%. So that's good there. And then, like I said, I've started tracking what the shares that they're reporting here for each quarter, things like that. So that way we can track to see how they are diluting or not diluting, okay, going forward. Based on all of this information, if we look at where they are right now, they are at $1.49. I have them at a P of 5 because not a lot of growth here. We'll see where they actually end up growing here this year. But right now we don't have too much growth. So I do have them at P of 5. So I'm looking at $1.70 perhaps to $2.55. They're at $1.49 right now. They are still slightly undervalued, but pretty close to where they should be valued, I think. So they do have an undervalued rating right now, by me at least, on all of the information that we do have. Okay, so let me know what you guys think of Digihost. Obviously, they're one of the smaller miners here, along with DMG and Soluna right now. Those are the guys that are just close to 1 exahash or under 1 exahash. But we'll see how they continue going forward. And some things that are concerning, but some things that are also positive, lowering their costs, general administrative and other things like that. That's good there. They just got to keep this up and actually grow their hash rate more. Okay, as I feel like I'm a broken record, just they got to grow their hash rate. And that's unfortunately the case with these Bitcoin miners. They got to grow their hash rate. Okay, so that's it for that one. Let's take a look at, I believe it's Mawson next. Yep.